Welcome to The Bottom Line. My name is Benjamin Poole.
I'm Dr. B.
All right, so today we are going to go over the stock market. Oh my gosh, what a wild ride.
What a week. Yeah, Monday was unbelievable. So
a huge sell-off.
Huge. I mean, NASDAQ was down 6+% pre-market.
Yeah, and there were so many different stocks that had earnings that were expected to, blow out of the water, but took some big dives. And then we had these other companies that were at the lows. Expectations were get big bid higher, but they still fell off.
Unbelievable.
So, it's been a crazy week. So we're going to go ahead and get in some charts. What do you got for us, Dr. B?
Yeah, so I feel like a broken record, but I've been, talking about this now all week, with all of our different live streams and chats. But if you take a look here at the NASDAQ 100, okay, this is the NDX or the index that tracks the NASDAQ 100. You can see here that this rising parallel, we've had all these different hits, and then look at where the market topped out so far. This might mark the all-time highs for quite a while, maybe a couple years, I'm not sure. But again, look at where it pulled back perfectly on that parallel. And this was the drop all the way down here to somewhere in the 17,000s or high 16,000s. We've rebounded now to about 18,400. And the question is, do we basically do a bearish retrace here and then start to fall again, or do we break back up above and then move higher? So I'm really going to be watching this chart over the next several weeks, trying to understand which way this is going to go. And that's what's on my mind. So Ben, you're looking at
NVIDIA. All right, NVIDIA was trading at about $140 not too long ago. This was obviously before the stock split, because it would have been at 1,400 had the stock not split 10-1. So massive run after the last earnings. It still hasn't had its earnings next. So that is a huge earnings report that's going to come out. It's going to really set up the tone for the rest of the market. If you would have told me that at one point the stock would have been down 33%, look at this, 35%. 35% drop from the highs here all the way down here. So it's no surprise that you had this mini gap fill right here, and then look at all this support. If you guys were looking at this chart, this would have been an epic spot for you to go long for NVIDIA. Now what we're doing is we're actually going to look for spots that could rebound to, and then potential shorting opportunities. Okay, so let me go ahead and clear my charts for you a little bit. All right, so here, now we're getting this bid off of this support level. This trend line right here is going to be resistance. So it comes back up to about $112, $115. That's going to be an excellent shortable level. It starts chopping a little bit sideways. It's going to move a little bit higher. My ultimate target, you have this really big gap fill right here. And then this down sloping trend line, you have the all-time highs to this pivot right here. And then right in this area, you have two factors, down sloping trend line and this gap fill at 126.37. For me, that is the ultimate level for a heavy short. And I hope it gets up there, because that's an exciting level for me.
Yeah. One of the interesting things is that NVIDIA, I think, is off its highs by about 30-35% from the all-time highs.
It was at one point
to the lows, right?
Yes,
to the recent
absolutely.
Lows. That's a big drop, almost 40% drop in the darling child of this recent bull market. So another thing I wanted to show you here is the VIX. Okay, and so very important to understand this. And again, I feel like a broken record because I've been talking about this all week, but it's really, really important to understand this. This is a chart of the VIX, essentially the volatility index of the S&P over the next 30 days, right? That's what the VIX tries to understand and tries to predict. You can see this chart goes back to 1990, okay, so let's say 35 years, 34 years, okay, 34 years, and there's been three major spikes in the VIX. The first, the Great Recession. The second, COVID. And the third, August 5th. What does this tell me? It tells me that something is up. Okay, that's the bottom line today. Something is up in the market. Okay, there's this carry trade over in with the Japanese yen, and so that unraveled this week. A lot of people are blaming that carry trade for the reason of the sell-off. But honestly, you know what I think it is? I think it's overvaluation. I think the S&P has gone up like this. Okay, and just so you understand, the VIX and the S&P are inversely correlated. So as the VIX spikes, the S&P falls. Okay. Again, it's the volatility of the S&P index. So in general, as the VIX spikes, the S&P falls. So 3 things. I think, number one, it's been this huge rise, this vertical rise in the S&P and markets overall. Number 2, I think it's overvalued, right? I think there's a lot of companies out there that are overvalued, especially in tech. And really, part of that is the breadth of the market, right? Very narrow breadth of the market. Okay, you had maybe, I think the Mag 7 made up about 35, 37% of the overall S&P's move in 2023 and 2024. And then number 3, you have a weakening labor market. Okay, we saw some data last week showing that jobs reports was down about 50% from June. June was about 220,000, maybe 215,000. Jobs report for July was 114,000, far lower than the market expected. And Gareth has taught us that the last thing that cracks before a recession is the labor market. We had a nice reprieve a couple days ago with the jobless claims coming in at about expected values. But the question on everyone's mind is, okay, what are the next couple months labor reports? Do we see weakness or do we see strength? And that's the big question I have.
Okay.
Yeah.
So just like he was saying, on August 5th, that was the big catalyst move. Yeah, this huge spike in the VIX. And then earnings for Apple was the week before. It had barely a down move. But then August 5th happens, and then you have this huge move down. It takes Apple down from its all-time highs down 17%. That is a huge move for the stock of Apple. You also had some Warren Buffett news saying that he's taken half of his position off, which, it's not a big deal. But now you're getting a rebound. We have established at least a pivot low. So that's good for us. It caught all this support right here. So what we're going to do now is we're going to take a fib level from here to here. And then we're looking at the 618 retracement for resistance. And then my favorite is the 886. So you've got this up-sloping trend line right here. It broke below. And then if it gets right up here to the 886, this is going to be another shortable level. So just like I gave you the NVIDIA one, this would be a great shortable level for Apple. It is going to get some resistance. You've got this pivot top right here and this consolidation right here. So that another level to look for, it would be the 618. Start chopping here. I think it's going to go up to the 886. And again, that will establish your second pivot. And then that will be your line in the sand. If it starts breaking above that, it will want to go higher. But ultimately, I think that is the level to look for an eventual rollover. I think it's going lower than the 17%. This is eventually going to be support. But once it breaks that, I think it got further downside on Apple.
Yeah, Apple, I think there's a head and shoulders there on Apple, isn't there?
I mean, yeah, I guess you can kind of make a case that this is a head and shoulder. You just don't have the other side of the shoulder. So even though you don't, this is an upsloping trend line. And so if it retraces right up to this level, which might actually be right at the 618, you are going to get some resistance. And then just like NVIDIA, you do have these inside channels, inside downsloping trend lines. And so this pivot will be resistance. So this could be the spot. Again, 618, it will be significant resistance. It's when you start chopping sideways, it's going to want to come up to the 886. So that's something to keep your eyes on. If you're going to start a position at this level right here, start with a small position, give you some maneuverability. So that way, if it does go up to the 886, then you can add to that position. And then just make sure that your stop is any stop at a daily close above the all-time highs, because it'll probably want to go higher. but it really depends on the rest of the market as well, right? So if the SPY is still going up, then Apple's going to want to go up. But if the SPY's going down, Nvidia's going down, it's going to take Apple down as well. And that's just how the markets are going to play out.
Yeah.
So what do you got next?
Yeah, speaking of head and shoulders pattern, this is UPST. This is a trade, a chart that ran earlier in the week, a stock that ran big time, I think up about 50% before it started to fall. But check out this head and shoulders pattern, okay? Here's your neckline right there. And look at that fall from about $34.75 all the way down to about $32. And again, this is how you take your measured move. You take from the head to the neckline and then take this distance right here and then take it from where it broke down, and that's about the same distance. And look at that. The measured move played out almost perfectly. So study the charts, learn the chart patterns, and you can profit.
That's right. So I got one more. And then I think we can call it a day.
Yeah.
Right. So here we go. A chart on Bitcoin. I know you guys are pretty interested. So I want you to notice this was August 4th. We started this downturn. So in the futures markets, the night before, the S&P 500 started to crash, and so did the Bitcoin market. Right. We got down below 50,000. I think it got down to 49,000 even on Bitcoin. Right, so this just shows you that this is a risk asset. This is not the digital gold yet. And so if the equity markets start rolling over even more, then so is Bitcoin. The one interesting thing is, like the Apple trade that I was telling you, we had a pivot high, pivot low. Well, Bitcoin is already retraced to the 618 retracement, and you have this resistance right here. So it's starting to consolidate a little bit below that. So this upsloping trend line will be support. If you break below, then it's going to go down. However, if you can bounce off of this, I think this is going to go higher as well. So going into the weekend, I can see 65,000 probably will be the max upside. You've got this pivot this pivot high right here, and all this price consolidation right here, all these little tails. So this will be significant resistance. Ultimately, again, 886 level, that's my level. 6.87 is my level. I think that would be the max upside for Bitcoin, at least unless the stock market is going to continue to go up. We still see a fall over in the equities market, then Bitcoin's going to go down as well.
A lot of sixes and sevens there.
There's a lot of sixes and sevens. Yes,
Jeez.
I know. It's great.
All right, well, that was a great action-packed episode. Look, I don't think the volatility is done. I think early next week, we're going to be looking for the increased volatility in the markets. Volatility is where we can make money.
The nice thing is the VIX has gone down 67%, I think, or 70%. It's now back in the 20s, and that is actually a good range. It gives you a little bit of volatility, but it's not over extreme one way or another. And so this is a great opportunity to go do some swing trading and some day trading.
It's a trader's market right now.
This is the trader's market. Yeah. You start dropping a little bit more and takes the volatility out, and you're going to get a nice rise. You start spiking. Then there's a lot more fear and emotions inside of the charts, and it's a little bit harder to trade. So right now, we're in a sweet spot.
If you learn the charts, you can take advantage of this, right? Go take the winning trader series. Take the 1 minute scalpel. Take all of the different courses that we have, and you're going to be much better prepared. Don't start trading without education. You will get wrecked.
Yeah. So please keep in mind this is for educational purposes only. Please do your own research. Thanks for joining us, and that's the bottom line.